Good afternoon. From the floor of the CME, this is Chris Robinson, Managing Director at TJM Brokerage for Ags and Commodities. And what are we going to talk about today? We're halfway through December. Historically, December can be a very whippy market. We just saw that today with the morning news that we were close to a deal with China. And what happened in the grain markets? Well, you had kind of a relief rally. As we went into today, March corn had been about a nickel away from contract lows at 3-month lows. In response to this trade announcement, trade tweet, we've had a pretty good bounce. Now, the funny thing is that China doesn't really buy corn. Nobody really seems to focus on that, but really what China has been in the past, it has been a big buyer of our soybeans. Soybeans had a good bounce too. Nothing spectacular though. The key level you think you need to watch in January soybeans is if we can get above $9. If we get above $9, that opens up the doors to possibly maybe $9.15 or higher. But if you look at soybeans, the bigger picture, right? We've just come off of a 92-cent sell-off. We've had about a 35-cent bounce back. That's where we're at right now. Now, if this deal gets done, you could see another move higher. Why? Basically for two reasons. It's December, the markets are thin. And secondly, managed money, who is they're kind of a force of nature. When you look at the commitment of traders, they're short corn and they're short soybeans. And them being short makes them out of position if we continue to get another move higher. So look at that, especially watch soybeans and corn. Now the flip side is, since it is December and all it takes is one tweet, that rally, this little bit of a bounce, recovery, it could disappear quite quickly. So I would just say that trade very carefully here in December. December typically is very, very volatile, even when we're not trading off of tweets. And so that's number one. Number two, the other market I want you to look at is cotton. Cotton just went through about a 7 or 8 month old bear trend line. Look at March cotton. March cotton is very sensitive to what goes on with China. China's the biggest producer and also the biggest end user of cotton. And lo and behold, here today, the March cotton contract here in the U.S., it popped above 66. There's a big trend line there. And anybody who was short hit the buy button today. So that'll be interesting to see. It pushes the cotton up to about a 5-month high. Those are probably the most sensitive markets I would continue to watch. Watch soybeans and watch cotton as we get through the rest of December and see if this trade deal is for real. From the floor of the CME, this is Chris Robinson. Have a great day.